Hey guys, welcome back to the Multifamily Investor Playbook. I'm Mark Faris. I'm here with my business partner, John Makarewicz. We run a real estate investment firm that has about 600 units, over 100 million in assets under management. And today we're going to be talking a little bit about what the headlines are saying and what our markets that we're investing in are actually doing. And so you're seeing in the headlines, there's a lot of recessionary talks that we're in a recession. There's a lot of fear out there, but the markets that we're investing into are telling a completely different story. So you have Charleston, for example, that has Google commit to $9 billion investment in its backyard. So it's adding a lot of jobs. We have Tampa that's posted its third straight year of record tourism revenue coming in. And then you have Atlanta as well that's adding jobs at a record scale as well. So we're going to be breaking that down of what the news is saying, which we all know isn't always entirely true, and or maybe it's just more of an overarching insight or overarching feeling. But when we're investing into these markets, they do tell a different story in many cases, and the markets that we are investing into are definitely telling a different story. So we're going to be breaking that down. John, it's great to be here with you.
So good to be here, Mark. Yeah, right. It's the idea that, we often get the national headlines. So they're looking at the national picture, but real estate is hyper local, right? I mean, it's not even just local, it's hyper local. It comes down to not only, the city you're in or sort of the metropolitan area you're in, but really like the submarket and the neighborhood and the community, right? And so this is an opportunity for us to break down while even though there are those headlines of, the job market is softening, recessionary fears, stock market's at a record high, but we've got prices rising. So where are we wanting to invest, right? And part of the reason we've always loved the Sun Belt is because number one, in migration, right? People are moving to these markets, but what happens is the jobs are following, or in some cases, preceding that in migration. But beyond that, these are areas that just have a lower cost of living as compared to the national average, and that's driving a lot of this in migration. So, yeah, I think that the bottom line is like local jobs matter more than national headlines, right? So, national job numbers are averages across every metro, right? And some are struggling and some are thriving. Mark, I think a little bit about Texas. And for example, we are looking in Texas, just haven't found any deals we love yet. But, if you think back to the Great Recession, the joke is Texas sort of sat it out, right? Because they have a thriving oil and gas business. And so even though the rest of the country was struggling, you go to Houston and Dallas in '08 and '09, people were still living like nothing was happening, right? And so, there's always going to be those examples. And right now, Atlanta, Charleston, and Tampa are really showing that. So, where is the specific city where this building sits and what's happening in that city, right? Jobs create renters at the end of the day. So when we see jobs coming to an area, no matter what's happening in the national headlines, that's where we're looking. And then the other factor here is job diversity, right? Because that's really what protects NOI. So when you have a market that has meaningful employment across multiple sectors, if one sector suffers, then, there's other opportunities and jobs for these folks to have. And obviously that income growth when it comes to new jobs, because as new jobs come to the market, more people come in for those jobs. We often see rising salaries, right? So when wages rise, like rent growth becomes very achievable, right? And I think the other factor here that just is worth pausing on is really the types of assets we're targeting here. We're targeting Class B
Mm.
apartments and giving them a Class A feel. And so what does happen in a recession is that somebody, for example, who's in that Class A building, say paying $2,400 in rent, even if they haven't lost their job or something and they're just going, gosh, I'm just a little fearful, they're going to trade down to a Class B, particularly one that like Faris Residences, where we have an extreme focus on the resident experience and we're providing very high quality units at a much more affordable rent. So, for example, like this deal we're doing in Smyrna right now, a brand new Class A is $2,200 to $2,400 for a one bedroom. We're targeting like $1,400, $1,450, right, for a renovated premium unit. So that's a factor here. So the point is let's dive in and look at Atlanta a little bit and discuss the job story behind the second highest rent growth forecast in the nation.
100%. So Atlanta is a market we really like. We have assets currently in Charleston and in Tampa as well. And Atlanta is a market that is very, very strong. And one of the things that you had mentioned earlier is the income to rent ratio. There's more affordability. Say on it, for example, if the average income is 100,000, we do like to be able to be in a market and to buy assets that we can charge, say $25,000 in overall rent, for people to be spending about 25%. That's like a really good number. Like under 30% is really strong, but 25%. After we renovate and increase rents, if they can be spending 25% of their income and they have 75% left over, of course there's going to be taxes and whatnot, but that ratio is something that is very strong, as in more people will move there. And what these employers are actually doing, and we're seeing like with Google in Charleston, for example, is that they're moving these massive corporate and overall, we'll say production facilities that employ really solid paying jobs. They want to move to an area where there is more affordability, because you could imagine if they move to a city like say New York or say California, in many places there where they're paying like 50% of their average income, then they're going to be paying a lot more out for salaries, right? And so Atlanta is an area where we're seeing a lot of jobs moving to. For that is one of the main reasons. And income is really one of the main things that drive real estate prices. So John, through the years we've sold thousands of properties on through the years, and then also we're seeing what drives properties and values, and a lot of it has to do with jobs. High paying jobs is what really creates more better prices here. So let's take a look at Atlanta. So 19,000 new jobs are projected to be added this year in 2026. So it's the fourth highest gain amongst all major U.S. metros. So this is from Marcus and Millichap study. So office using employment alone to grow by 4,500. So these are new roles. So these are really solid paying jobs, which is the fourth highest nationally. Metro Atlanta employment has grown nearly 2% year over year. It's outpacing the national average. 42% of Atlanta Metro adults hold a bachelor's degree. And so this means they're just more educated as well. And this is something that I've seen in Florida as well, is that, the state really wants to help incentivize people going to schools and universities, because in their local state, because there's higher probability that they're going to stay there after they finish school and graduate. And not saying that going to post secondary university is the main determinant if they're if they're going to do well in life, but it is actually a key metric that we
That's
look
right.
at, is if you do go to school, likely that there's going to be a higher paying job after. And so that's really strong as well. 42%. I mean, that's pretty strong from a bachelor's degree or higher. And the median household income is $87,000, which is above the US average. So think of it this way. So you have higher income on average and lower expenses in rent than other cities. So when you have that gap there, that's what helps drive real estate prices and increase rents over the coming years, stronger than many other indicators when it comes to real estate.
You nailed it. I mean, you actually mentioned Georgia. So I, live in Atlanta, and so they have wonderful programs here. So, for example, my son goes to the University of Georgia, and 100% of his tuition is paid. And so he's got what's called the Hope Scholarship. So if you maintain a strong GPA in high school, like universities are free. But then there's an add-on, Zell Miller. So it's like if you're at 3.8% GPA or higher, you get that. So they're even covering his books and some of his living expenses. And so the state really incentivizes that education. And then you kind of touched on this, but the state is also incentivizing businesses to come in, right? So education and health services are huge in this market. It's really driving a lot of the growth. But in addition, tech is a huge factor. So computer and mathematical roles are 4.1% of the Atlanta job market, which is well above the national average. IT jobs very similar. And Georgia's actually surpassed Northern Virginia as the nation's most active data center market. And so that's leading to a lot of high paying jobs and employment opportunities. Another big factor is corporate relocation. So it's interesting, the Olympics in 1996 kind of put Atlanta on the map. And, a lot of people were coming into the city, and we saw a wave of economic activity after that. Well, we're also a FIFA World Cup host city. So, maybe not as strong in terms of visibility as, say, the Olympics, but it will bring that infrastructure investment, which is already happening, and then year awareness of the city as a global destination. So, for example, Yamaha Motors is moving their entire U.S. headquarters into Kennesaw, Georgia now. for those that are already investing or interested in investing in our Smyrna deal, Kennesaw is just about 20 minutes away, right? So those will actually be job opportunities that our residents at the Smyrna property will likely be able to take advantage of. Rivian, which is a great company that is producing electric vehicles, has their new regional headquarters in Atlanta. Sage is another company that's expanding here. So just a lot of major activity happening in terms of corporate relocation. So at the end of the day, it's all about supply and demand. And, Atlanta's projected to rank number 2 among all U.S. major cities for effective rent growth in 2026 per Marcus and Millichap, projecting 4.1% rent growth. So it's really the perfect storm for investing in apartment buildings.
Yeah, 100%. And it's interesting when you think about it, if we were to zoom up a little bit more, that, corporate companies are being incentivized by these cities to come and join. And, I've spoken with a lot of politicians through the years, and I've seen some that are very pro growth. They want growth, uh, and others that aren't. And so the policies and the incentives that they offer corporate companies make a big determinant if those companies move there. And some of the things could be, they have a lower tax base, right? And it
Yeah,
makes sense to me, John. I mean, listen, if you have new jobs coming in, people are going to move to that area, and there's going to be higher taxes, municipal taxes. A lot of them are going to be buying, and it's like give before you receive,
that's
right?
right.
And this whole idea, this applies really well to how we look at our assets when we come in. We're not just going and squeezing the existing residents. That's not our approach. Our approach is to come in and give back to the community first. Give, have an open hand with new amenities. Update the overall grounds, make sure the property management on site and maintenance tech, they're all caught up, and the customer services is there. And we know based on our numbers that when we go and do that, when it comes time for the renewals, naturally the rents will increase. But we've given first. And so we don't get a lot of pushback. I mean, listen, there's always going to be some, but we add value first, and they see, oh, you know what? I'm getting return for this. You're not just squeezing me. And this is the same in the cities. There's like when new corporate companies are analyzing different cities, they're looking at the overall income to rent ratio. They're seeing, okay, what do we have to pay our employees on average? But they're also looking at the incentives from the city, and they're actually speaking with the city's officials. And
Yeah,
if they're getting a tone of like, we want you. We're going to do what it takes to get you here. We're going to be easy to work with. That starts at the top. And if
yeah,
they're not getting that, they'll just go to another city because these corporate companies know like they're going to bring a huge amount of economic stimulus to each of these cities here. And so it really starts with leadership. I mean, you and both know, John, that any sort of company, and I'd say that if you have a leader that is not pro growth, that it just won't happen. And
yeah.
so these markets that we're investing, Atlanta, Charleston, Tampa, the leaders are very pro growth, and they're taking initiatives, and they're offering these corporate companies incentives to be able to make it happen.
Yeah, that's right. So we'll flip kind of gears over into Charleston. So you touched on this at the top, but Google is actually investing $9 billion into that market, largely in terms of cloud and AI infrastructure. So that'll be a big job creator, but obviously those investment dollars coming into the market, you get the jobs that are created, but of course there's the construction and all the development and infrastructure that has to go into build that create a massive amount of jobs. And so there's two, campuses being built in Dorchester County, which is in that Charleston market, representing a $2 million investment alone. So 200 new permanent operational jobs plus approximately 1,200 long-term construction jobs per campus. So a lot of job opportunity being created. And there's just sort of a sizzle factor when like a company like Google comes into a market and invests that kind of money and it starts to attract other businesses. And then there's of course the businesses that support that ultimate business, right? So the long-term effect will be huge. It's currently the fastest growing state in the nation, South Carolina, at 1.5% population growth. It's a very affordable county. And it's come a long way. About 25 years ago, it wasn't that sexy, but now people love South Carolina. You got the coastal region, and it goes back to affordability. There's some great cities in South Carolina, Greenville. You've got Clemson University nearby. BMW has plants there. Volvo in the Charleston market. So just a lot of things happening. But the big story is really manufacturing and then like defense, right? So Boeing, for example, has major operations there. For example, their 787 planes are first final assembly and delivered in North Charleston, one of only two global assembly locations for Boeing. Eaton, which is an expanding aerospace manufacturing company, has a $46 million investment coming in. Keel Defense, Mercedes Benz Vans. So a lot of that happened alongside technology sector. So more than 90 times since 2001. So 7.2% annual rate growth in terms of technology jobs coming into that market. But what we love about Charleston is there's actually a huge supply cliff that's about to occur. So there was a lot of new construction that occurred, but it is effectively stopped. So we're going to actually see supply constraints in that market in 26 and 27. And whenever there's a supply constraint, pricing goes up. So expecting to have 2.2% organic rent growth, with further acceleration expected as that supply wave, crests and really collapses.
You got it, John. This is a big one when you have growth in employment and you have less new supply coming on. So we have a 72% decline in construction starts from the peak of the market and 73% decline in completion. So we track permits or starts and we track deliveries into the market. So we can see the new supply coming into a market. And when you have a lessening of the actual supply and you have growth on demand, that's what drives rents and drives overall value. So we get down, it's very analytical to be able to look at the numbers, and we just track the numbers and invest in what the numbers are telling us. And these markets that we're investing in, they tell a very similar story. And a big part of that, John, is at the peak of the market, there was a lot of new development that was happening, and there was some overbuilding in some areas. Well, that's now getting absorbed into the market. In the last couple of years, there's been a lot of developers not starting with new builds, and in these markets, there's ongoing population growth and overall demand for these units, which is actually, John, painting a phenomenal picture for the rest of 26, 27, and 28. And this is where we're like screaming from the rooftops with
Yeah.
our partners is like, any of the partners who are coming in now in this market, we really believe based on the data that you'll be looking back at this time and say, wow, like
Yeah.
that was a phenomenal time. And the markets have done a lot better. And we're just seeing it coming. Like we can see the growth in over the next 2 to 3 years because of the amount of starts and deliveries coming into the market and then the growth. So there's a very strong case moving forward for a very strong run. Not like I don't believe it's like we've seen in 21, 22, where we saw these massive growth super to that degree, but very healthy growth we're seeing moving forward, and especially with all the investment coming into these cities as well. Generally, it takes a year or two, sometimes three, to be able to see that stimulus and that investment pan out on the back end with overall growth when it comes to property values and rent growth as well.
That's right. So we'll kind of end on Tampa. It's a little bit of a quicker story. So Tampa's actually been very steady in a really great way. So job growth is actually above the national average. In fact, their GDP grew 4.3% last year. A lot of finance, insurance, real estate, and healthcare jobs there. Raymond James and JP Morgan Chase, have sort of created what they're calling the Wall Street of the South, with a huge financial cluster in the Tampa market and just healthcare, university, education, right? A lot of great things happening. But what's fascinating about Tampa is Tampa in the past. I mean, there's always been a tourism component, but it's really becoming a tourism hotspot. And so, if, for example, a market like Myrtle Beach, where we have looked at, but it is so heavily tourist related that we do wonder and worry, like, if there's a recession, tourism will dip. But what's happened with Tampa is it's actually become really a great attraction because you've got the proximity to the beaches and why people love Florida. But there's museums, art, culture. And so, for example, I have friends that love Tampa so much, they're going for long weekends a couple of times a year just to enjoy the zoo and the, aquariums and all the great things that they offer. So their hotel revenue actually surpassed $1 billion for the third consecutive year in a row. So that tourism impact is definitely there. And that does create jobs, right? I mean, obviously, the hotel and hospitality and restaurant space. So that's been sort of a more recent development. I mean, like I said, it's always been there, but it's becoming more and more popular for that, which is driving more jobs. So, very similar to Charleston and even Atlanta. supply is clearing and the recovery in terms of that new supply that come online is well on its way. So it's a market we love. We have one deal there today. We're always looking in that market, just haven't found anything that meets our rigorous underwriting criteria. But it's a market we'll continue to monitor, and we're a big fan of.
Yeah, 100%. So if you do want to talk a little bit more about real estate investing, it's very hard for you to maybe find a great real estate investment. Maybe you're tired of taking the late night tenant phone calls. You love real estate, but you can't find good deals. You don't have the time. You're running your business, you're busy with the kids, and you want to get into real estate and take advantage of this market that we're in right now. Is definitely a buyer's market. And this won't last forever, right? From a buying standpoint, there's always windows, and this is definitely a great time to be able to come in. If you do want to learn more about how we could potentially work together and partner up on our next opportunity, we do have a 100-unit apartment community in Smyrna that's available today at the time of this recording. The spots are getting filled up very quickly here as well. If you do want, you can go ahead and book a one-on-one call with us and find a little bit more to see if we are the right fit moving forward to be able to make some big win-wins together moving forward. Thanks for listening to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.